the President of the United States, the leader of the most powerful country on earth, can fire his Secretary of Defense, his Attorney General, even the head of CIA, but the chairman of the Federal Reserve is untouchable.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No. This isn't just a banking institution. This is a power center that operates independently, beyond the reach of voters, beyond the reach of Congress, and even beyond the reach of the White House itself.
Sir, do you believe that the president has the power to fire or demote you?
Not permitted under the law.
Not what?
Not permitted under the law.
Who really controls the Federal Reserve? Who owns it? And why does the world's most powerful central bank operate outside the control of the government? Let's find out. In 1910, on a remote island off the coast of Georgia called Jekyll Island, a secret meeting took place. This wasn't just any gathering. It involved some of the most powerful men in America. Their mission is to create a plan that will transform the financial system of the United States forever. That plan became the foundation of what we now know as the Federal Reserve, a system shrouded in mystery, suspicion, and controversy.
I was secretive, indeed as furtive as any conspirator. Discovery, we knew, simply must not happen, or else all our time and effort would be wasted. If it were to be exposed that our particular group had got together and written a banking bill, that bill would have no chance whatever of passage by Congress.
But why the secrecy? Why did they hide this meeting from the public for decades? And more importantly, what is the Federal Reserve and who truly owns it? Today, the Federal Reserve is one of the most powerful institutions in the world. It controls the money supply, influences interest rate, and shapes the global economy. Yet, it is not a government agency, it is not a private company, and it is not accountable to voters. So, who really pulls the string behind the Federal Reserve? In this video, we are going to uncover the truths. We'll dive into the mysterious origin, explore how it works, and reveals who benefits from its power. And by the end, you will have a clear understanding of the Federal Reserve and its role in shaping the world as we know it. So, stick around because this story is one you won't want to miss. To understand the Federal Reserve, we need to go back to a time when America's financial system was in chaos. In the late 19th century, the United States faced severe and frequent economic crises. Bank failures were common, and every few years, panic would sweep through the country as people rushed to withdraw their savings from the bank. These bank runs often leave the holding banks bankrupt, plunging the nation into deep economic depressions. So, what was the problem? We see Americans didn't have a central bank to stabilize the economy. The idea of a central bank wasn't really new because Europe has been using them for centuries. For example, the Dutch created the world's first central bank in 1609, and it helped run the Netherlands into a global economic powerhouse. Similarly, the Bank of England was established in 1694, and it became the backbone of the British Empire. But in America, central banks were really controversial. Founding fathers like Thomas Jefferson feared that giving too much power to a central bank would lead to corruption and tyranny. Jefferson warns that banking establishments are more dangerous than standing armies.
If the American people ever allow private banks to control the issue of their currency, the banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered.
His fears weren't entirely unfounded because during the Revolutionary War, the US Congress printed so much paper money, known as the continental currency, that it became worthless, leading to a phrase, "not worth a continental." To prevent similar disasters, the US Constitution later restricted Congress' ability to print money, allowing it only to mint coins. Despite this, there were efforts to establish central banks in the early days of the United States. Alexander Hamilton, one of the nation's first Treasury secretaries, led the creation of the first central bank of the United States in 1791. But the public opposition to central banking was so strong, and the first central bank, even its successor, the second bank, was eventually shut down. This left America without a central bank for much of the 19th century, a period marked by financial instability. This came to a head in 1907 during a severe economic crisis known as the Panic of 1907, when a single banker's failed attempt to manipulate the stock market triggered a widespread panic. Banks all across the country began to fail and fall like dominoes. The situation was so dire that J.P. Morgan, one of the wealthiest and most influential bankers of the time, had to personally step in to bail out the financial system. One man bailing out the financial system. Well, you see, this event made it clear to everyone that the US needed a central bank. But how could it be created in a way that would gain public support? That's where the secret meeting at Jekyll Island comes in. Because in 1910, a group of 6 men, including bankers, a senator, and an economist, gathered in secret on Jekyll Island, Georgia. They represented about 1/4 of the world wealth at the time. Their goal was to design a central banking system that would prevent future crises while appearing to respect Americans' anti-central bank sentiments, I guess. But to avoid public suspicions, they deliberately avoided using terms like central bank, and instead they called their creation the Federal Reserve. The name Federal Reserve was chosen carefully. By using the word federal, they gave the impression that the system was part of the government, even though it operates independently, and the word reserve appealed to the idea of financial stability and security. The plan they drafted would eventually become the Federal Reserve Act, which Congress passed in 1913. President Woodrow Wilson signed it into law, officially creating the Federal Reserve System. But what made this central bank different from the ones that came before it? And why has it endured when others had failed? The key was compromise. You see, the Federal Reserve's unique structure was designed to balance competing interests. It comprises of a network of 12 regional Federal Reserve to actually distribute power geographically. Also has a board of governors appointed by the president to provide a layer of public oversight. And then we have private banks' involvement by allowing commercial banks to hold shares in this regional reserve bank, thereby ensuring their financial participation. You see, this hybrid model satisfied enough stakeholders to ensure its survival. However, this structure also created questions about control and accountability, questions that persist to today. So let's take a closer look at how the Federal Reserve is structured, who controls it, and how its decision shapes the economy. The Federal Bank isn't just one big bank. It's a system unlike any other in the world. It's designed to spread power across regions, balance public oversight with private interests, and maintain independence from politics. At the top is the Board of Governors, a group of 7 people who oversees the entire Federal Reserve System. They are appointed by the President of the United States and serve a 14-year term, which ensures that no single administration has too much influence over the Fed. These governors make many of the big decisions like setting monetary policies and supervising the regional banks. There's also the 12 Federal Reserve regional banks spread across the countries in cities like New York, Chicago, San Francisco. These banks act as a Fed boots on the ground, managing operations in their district and working directly with commercial banks. The presidents of these regional banks aren't elected by voters. They are chosen by boards made up of representatives of local businesses and banks. So this is where private banks actually do come in. By law, commercial banks have to buy shares in the regional Federal Reserve banks, but these shares don't work like your normal regular shares because you can't sell them, you can't trade them, and they always pay a small dividends. The Federal Reserve has its own decision-making body for monetary policies. That is the Federal Open Market Committee, or the FOMC. This group meets regularly to decide things like interest rate or how much money to pump into the economy. It's made up of the board of governors and a rotating group of regional bank presidents, with the New York Fed president always getting a seat at the table. Talk about power. Now, here's where things get interesting. The Federal Reserve is independent, meaning it doesn't take orders from the president or Congress in its day-to-day decision.
The United States typically keeps the Federal Reserve at arm's length, with one recent exception.
The Fed is out of control. The Fed has gone crazy. Jerome Powell is not making it easy.
But it's not completely untouchable. You see, Congress created the Federal Reserve, and Congress can change the Federal Reserve. As a matter of fact, Congress can dismantle it if they choose. And that's why the Fed walks a fine line, balancing independence with public accountability. At its core, the Federal Reserve structure was designed to keep power distributed and prevent any one group from controlling the entire system. But it also raises questions about how much influence private banks have and whether the system is truly serving the public. And in the next section, we'll dive deeper into the Fed monetary policies and how it shapes the economy and your life. The Federal Reserve's true power lies in its ability to shape the US economy and, by extension, the global economy. It does this primarily through monetary policies, decisions that influence how money flows and how much it costs to borrow. At the heart of this process is the Federal Open Market Committee, or the FOMC. This group, like I said earlier, meets regularly to make two critical decisions: what to do with the interest rate and how to manage the Fed's balance sheets. Interest rates affect everything from your mortgage to your credit card payment, while balance sheets determine how much money is circulating in the economy. To give you an idea of its scale, the Fed's balance sheet contains trillions of dollars in US treasuries and mortgage-backed securities. One of the most powerful tools the Fed has in its arsenal is the ability to raise and lower interest rates. When the economy is booming, the Fed might raise rates to slow down inflation. And when the economy is struggling, it lowers the rate to encourage borrowing and spending. For example, during the 2008 financial crisis, the Fed slashed interest rate to nearly zero to help stabilize the economy. The same happened during COVID. The Fed also creates money, yes, money out of thin air, when it buys assets like government bonds, and it's used to inject money into the financial system. But when the Fed owns too much low-yield bonds, it can actually start to lose money. And right now, the Fed isn't profitable because of the low returns on its massive balance sheet. Despite its power, the Fed operates behind the scene with little direct input from voters. The people making these monumental decisions are the FOMC members. These are unelected individuals whose choices impact not just the US but the global economy. The lack of voter accountability is a key reason why the Federal Reserve often faces criticism and skepticism. The Fed influence doesn't stop at Americans' border because the US is the world reserve currency, which means the Fed policies ripples across the globe, affecting everything from international trade to foreign investment. When the Fed changes interest rate, it can spark economic shift in countries halfway across the world. So, in this next section, we'll answer the question, who really owns the Federal Reserve and who benefit most from its power? For an institution that controls the world's most powerful currency, you would think the Federal Reserve would have clear ownership, right? But that's where things get really complicated, because the Federal Reserve isn't a private company, like we said, and it's not fully government-owned, and it doesn't answer to voters. So who actually owns it? First, let's clear up a common misconception that the Federal Reserve is not owned by the US government. It was actually created by the Act of Congress in 1913, but it operates independently. However, Congress, like I said earlier, still has the power to change the Fed structure or even dismantle it altogether. Now, here's where things get even more interesting. While the Fed isn't owned by government, it is also typically not a private company. Instead, ownership is split among commercial banks that hold shares in the 12 regional Federal Reserve banks, right? But these shares, like I said, don't work like a regular shares because the banks can't sell them, they can't trade them, and they can't even use them for collaterals. However, they do receive a fixed 6% annual dividends on these shares. So, does that mean the federal banks control the feds? Well, not exactly. While member banks get to vote on some of the board members of the regional Federal Reserve Bank, they have little say in the major policy decision. The real power lies with the Board of Governors and the FOMC, which set the monetary policies and control the money supply. These positions are appointed by the president and confirmed by Senate, adding a layer of government oversight. But once appointed, they don't answer to voters, making the Fed one of the most independent financial institutions in the world. Despite this structure, some banks have far more influence than others. Thanks to a Freedom of Information Act request, we know that major banks like Citibank and JP Morgan Chase hold a significant portions of the shares in the New York Federal Reserve, which is the most powerful of the 12 regional banks. In fact, Citibank alone once held 42.8% of the total shares, while Chase Bank held 29%. This unique setup means that while the Fed isn't owned in the traditional sense, the biggest financial institutions in America still have a strong foothold in its operations. The question is, does this setup serve the American people or does it favor the financial elites? Well, let's pull back the curtain a bit and see who really actually profits from the Federal Reserve's operation and whether its policies benefit the economy or just the banking sector. Here's the thing, the Federal Reserve isn't designed to make profit like a traditional company, but it still generates billions of dollars every year. The real question is, where does this money go to? Well, first, let's talk about the banks. As we mentioned earlier, commercial banks that hold shares in the 12 regional Federal Reserve banks receive a fixed 6% dividend every year. This might not sound like much, but when you consider the size of these banks, it adds up. However, they don't get to keep any additional profits that the Fed makes. The bulk of the Federal Reserve's earning comes from interest on the US Treasuries and the mortgage-backed securities that it buys and holds on its balance sheet. In 2022, the Fed earned $58.4 billion, but in previous years, that number has even been higher. So, where does the rest of the money go? By law, after paying out expenses and dividends to member banks, the Federal Reserve sends its remaining profit to the US Treasury. In most years, this amount is in tens of billions of dollars, helping to reduce the national deficit. But here's what most people don't know. The Fed can actually lose money too. When the Fed raises interest rate, it has to pay more interest on the reserve that bank hold. And this in turn reduces its profit. As a matter of fact, as of 2023, the Fed is no longer profitable because it's paying more in interest than it's earning in its assets. That means, for now, it's not sending any money to the Treasury at all. So, while the Fed doesn't operate like a typical for-profit business, its policies and financial decisions still impact the banking sector and the economy in a big way. Some argue that the Fed policies like lowering interest rate or massive bailout often benefit the bigger banks or the biggest banks and Wall Street investors more than the everyday Americans. Others argue that without the Fed, the financial system will be even more unsustainable. So, which side is right? Well, that depends on who you ask. But one thing is clear. Understanding the Federal Reserve profits, losses, and financial influence is key to understanding how money and power works in America and by extension, the rest of the world. Because for an institution that controls the world's most powerful currency, the Fed isn't without controversies. Over the years, critics from all different sides has questioned its power, its transparency, and its influence over the economy. Well, let's break this down. One of the most common concerns is the lack of transparency. While the Fed releases reports and holds press conferences, some of the most important decisions like emergency lending programs or balance sheet expansion happens behind closed doors. Many have called for a full audit of the Fed, arguing that the public deserves to see exactly how money is created and distributed. In 2010, the Fed secretly loaned $16 trillion to major banks and corporations worldwide during the financial crisis. Another major issue is the conflict of interest. Many of the people who serve on the federal board, especially at the regional bank level, have direct ties to Wall Street and major financial institutions. For example, past presidents of the New York Federal Reserve, the most powerful of the 12 regional banks, have gone on to work in major investment firms like Goldman Sachs. Critics argue that this revolving door between the Fed and the banking system makes it hard to believe that the system is truly independent. And then there's the question of inflation. The Fed's primary job is to keep inflation stable, yet its own policies often increases inflation. When the Fed prints money through programs like quantitative easing, it injects billions or even trillions into the economy. And while this can prevent the financial crisis, it also weakens the value of the dollar over time, making everything more expensive. Between 2020 and 2023, the Fed expanded its balance sheet by over $4 trillion, contributing to one of the highest inflation spikes in decades. Another controversial aspect of the Fed is its role in financial bailouts. During the 2008 financial crisis and again in 2020, the Fed stepped in to rescue failing banks and corporations with massive emergency programs. And while supporters argue that these actions prevent economic collapse, critics say that they create a system where the biggest banks take reckless risk, knowing that they will be bailed out. And this has led to accusations that the Fed serves Wall Street more than it serves Main Street. And finally, there's the issue of whether the Federal Reserve should even exist. Some argue that the US survived without a central bank for most of its history, and that returning to a system based on gold or decentralized banking could make the economy stronger. Others say that in a modern global world, a central bank is necessary to prevent crisis and manage inflation. So, is the Federal Reserve a necessary stabilization or an unchecked power that serves the financial elite? That's the debate. But one thing is clear though, the Fed holds more economic power than any other institution in the United States, and yet most people barely understand how it works. In the final session, we'll look at what could happen to the Fed in the future. Could it be reformed? Could it be abolished? And most importantly, what would happen if the US didn't have a central bank at all? The Federal Reserve has been at the heart of American financial system for over a century, but its future isn't set in stone, is it? With growing criticism, the economic instability, and the new financial technologies emerging, many wonder what's next for the Fed. Well, one possibility is reform, because some argue that the Fed needs more oversight and transparency. Many proposals have included requiring full public audits, limiting its ability to print money unchecked, or changing how its leaders are appointed. Some lawmakers have pushed for laws that would force the Fed to focus more on job growth and less on Wall Street bailouts. Another extreme idea is abolishing the Fed altogether. Some believe that the US should return to a gold-backed currency, arguing that a system without a central bank would prevent inflation and reckless money printing. This idea has been proposed multiple times, but so far, no serious effort has succeeded. In 2012, Congressman Rob Powell introduced a bill to end the Fed, but it never passed. On the other hand, some argue that the Fed should have even more power to prevent economic crisis. These voices suggest expanding its roles into digital currency, increasing the regulation on private banks, or even introducing a central bank digital currency that would allow the Fed to manage money supply more directly. China has already launched a digital yuan controlled by the central bank, and the Fed was actively researching similar possibilities until the new president signed an executive order that puts a stop to the creation of CBDCs. No matter what happens, one thing is clear: the Fed isn't just another financial institution, it has the power to create money. Think about it, to create money. influence global markets and make decisions that affect everybody's wallet. Now that you've seen the full picture, the history, the structure, the profits, and the controversies, what do you think? Should the Fed be reformed? Should it be abolished? Or is it doing exactly what it was designed to do? Let me know your thoughts in the comments. If you find this video helpful, make sure to hit the like button because it really helps more people to see this content. And if you want to learn more about power, money, and how the financial system really works, subscribe to the channel and turn on notifications so you don't miss the next video. Thanks for watching, and I'll see you in the next one.